Bitcoin price drop below $57,000 costs traders $365 million. The total amount of liquidations in the cryptocurrency market over the last 24 hours has surpassed $365 million, with the majority of forced closures affecting Bitcoin and Ethereum positions. Bitcoin traders collectively faced losses exceeding $153 million. Market participants with positions in Ethereum also incurred substantial losses as the sharp drop in the value of the second largest cryptocurrency below $2,900 cost them nearly $90 million. Among altcoins, SOL and Doge were leaders in liquidations, along with other well-known coins. Over 90% of the liquidations were distributed among major exchanges such as OKX, Bybit, Binance, and Huobi. The largest single order was executed by OKX, which closed an ETH/USDT position worth $6.07 million. Bitcoin started the month with a sharp decline, with the price of the leading cryptocurrency falling below the $57,000 mark today. Analysts point to increased selling pressure from miners, nearly halted inflows into spot ETFs, and uncertainty regarding the timing of the Federal Reserve's interest rate cuts as the main reasons for the crash. Pepe risks falling to a 2-month low amid failed breakout attempt. Following an unsuccessful breakout from a descending wedge, the popular meme coin Pepe now finds itself particularly vulnerable to a decline. A loss of support at $0.00000624 could see the altcoin's price plummet to a 2-month low. As meme coins are typically associated with high risk, holders of such assets often prefer to lock in profits quickly. This was the case with Pepe. After the appearance of the first green candle on April 20th, investors began to sell off their tokens. According to data from the analytics platform Into the Block, addresses holding between $10,000 and $10 million in Pepe offloaded more than $120 million worth of the coin. This sell-off occurred over just 10 days and halted a potential rally midway. The network growth metric, which measures the rate of new address creation, is currently at a 2-month low, indicating that investors are cautious about Pepe. Open interest in Doge, SOL, and XRP declines. Implications for the market. Investors are concerned that the drop in open interest for popular cryptocurrencies could trigger a bearish price dynamic. The total open interest for Dogecoin, Solana, and Ripple has decreased by 51%, raising investor anxiety about the future of these altcoins. Open interest represents the total number of open contracts at any given time for various derivatives such as options and futures. This metric provides insight into investor behavior and market dynamics. Leading the drop, the popular meme coin Doge saw its open interest fall by 64% since the start of April to $668.2 million. Solana and XRP also saw significant declines, dropping 47% to $1.51 billion and 44% to $497.67 million, respectively. Open interest in Bitcoin also fell, reaching levels last seen during the FTX crash. This further heightens concerns about the overall state of the crypto market. The open interest oscillator has significantly moved away from its peak of 73,000 and is currently at -15%. Normally, a rally begins from the lower boundary, but in our case, it is hindered by bearish market orders, stated Axel, an analyst from CryptoQuant. The sharp decline in open interest for Doge indicates reduced trading activity and potential loss of investor confidence. This is corroborated by the price dynamics. Doge continues to trade near the lower boundary of its short-term range. Such trends often signal consolidation phases, which may precede further losses if there is no significant uptick in buyer activity. Solana faces similar issues. In addition to the drop in open interest, there is a dramatic reduction in monthly transaction volume in the network by 95%. In April, it fell to $7.32 trillion from much higher levels in March. Decreased network activity and bearish technical patterns suggest that Solana's price may lack the strength to reclaim recent highs. The open interest scenario for XRP is somewhat different, given recent whale activity that includes transferring 29 million XRP tokens from Bitstamp to an unknown wallet. Historically, such movements portend price jumps, though relying solely on one event to predict market movement is risky. Moreover, the ongoing legal battle between Ripple Labs and the U.S. Securities and Exchange Commission over XRP's status as a security continues to pressure the market and heighten uncertainty. Nonetheless, there remains a chance for a sharp reversal, particularly for XRP. The reduction in leveraged positions might indicate short-term bearish selling pressure. However, the predominance of perpetual contracts in the structure of open interest means there is a potential for rapid price dynamic changes if buyer activity resumes. April sees a 141% decrease in losses from cryptocurrency project hacks. April marked the lowest level of damages from cybercrimes since records began in 2021. According to CertiK, cryptocurrency projects lost a total of $25.7 million last month, a 141% decrease compared to March. The report from analysts indicated that a significant portion of the declared sum, $21 million, was due to hacks. Exit scams accounted for losses of $4.3 million, and flash loan frauds led to $129,000 in damages. In contrast, March saw cyber criminals extract about $187 million from the crypto industry, with a total of 30 incidents occurring during the month. Approximately 11 of these cases involved the compromise of private keys, one of the primary reasons for the hacking of projects. In April, however, such attacks totaled only 3. CertiK experts attributed the significant reduction in losses primarily to the decrease in thefts of private keys. Since the beginning of 2024, cryptocurrency projects have cumulatively lost $449 million. The largest attack remains the hacking of the Orbit bridge, which resulted in a loss of $81.5 million. The most substantial hack in April was an attack on the infrastructure protocol Hedgeye Finance. The perpetrator took flash loans across several blockchains and siphoned about $44.5 million from the project. Early in the month, hackers stole $2.8 million from the cryptocurrency exchange Fixed Float. The platform was breached by cyber criminals responsible for a February attack on the trading platform, which had lost $26 million at that time. CertiK analysts did not include in the report the gaming blockchain platform zCasino, which is accused of stealing $34 million. The project is currently at the center of controversy, however, nothing has been proven yet. Experts emphasized that if all allegations are confirmed, they will update their statistics on the crypto industry's losses for April.